You're here. You're here because of the silence. It's a special kind of quiet, isn't it? It's not peaceful. It's the deafening silence that comes after the storm, after the frantic clicking, after the desperate prayers whispered to a screen that showed you no mercy. It's the silence that now fills the space where a significant portion of your account used to be. The noise is gone, but the ringing in your ears, that's the sound of the damage. And it's loud, so loud. Right now, you're feeling a toxic cocktail of emotions. There's the shock, that cold, creeping numbness that makes you stare at the wall, at your own hands, wondering if this is real. Your P&L statement is a scar, a brutal, undeniable number seared into your brain. It feels unreal. A number so large it seems like a typo, a glitch in the system. But it's not. And the weight of that reality is crushing you. Then comes the shame. Oh, the shame is a heavy cloak. You feel foolish, reckless. How could you let this happen? You think about the rules you broke, the gut feelings you ignored, the little voice of discipline you told to shut up because this time was different. You feel like a fraud. All those books you read, the hours of chart analysis, the conversations where you sounded like you knew what you were doing, it all feels like a lie now. You're terrified of someone asking, "How's trading going?" The thought alone makes your stomach clench. You might have to lie to your partner, your family, your friends. The isolation is immediate and absolute. And underneath it all, simmering like lava, is the anger. Anger at the market, that faceless, merciless entity that chewed you up and spat you out. Anger at the so-called gurus who made it look so easy. But mostly, the anger is directed inward. It's a white-hot, self-loathing rage. You, the idiot. You, the gambler. You, the one who pulled the trigger and blew a hole in your own financial future. I need you to listen to me. I know this place. I know this silence. I'm not here to offer you a magical new indicator or a get-rich-quick scheme to win it all back. To be blunt, that's the very poison that likely got you here. I'm here for something far more important. I'm here to guide you through the mental reset, to help you navigate this wreckage, not so you can immediately jump back in, but so you can find a foundation again, so you can survive this, because you can survive this. This feeling, this gut-wrenching, soul-crushing, hope-destroying feeling is not the end of your story. It's a chapter, a brutal, painful, unforgettable chapter, but it's not the final one, unless you let it be. So breathe, just for a second, in through your nose and out through your mouth. Forget the charts, forget the numbers, forget the noise. For now, there is only the silence. And in this silence, we are going to begin the work. Not the work of trading, but the work of healing, the work of rebuilding. This is your mental reset guide. Let's walk through it together. Chapter 1: The Emergency Brake, Radical Disconnection. The first 24 to 72 hours after a catastrophic loss are the most dangerous. Your mind is not your friend right now. It's a wounded animal, backed into a corner, ready to do something irrational, something desperate. The single greatest urge you have is to do one of two things: either make it all back immediately or quit forever in a blaze of glory. Both are born from panic. Both will lead to more destruction. So our first step, our only priority, is to pull the emergency brake, hard. I'm not talking about just closing your trading platform. I mean a radical, unapologetic, total disconnection. This is non-negotiable. You are officially on medical leave from the market. Your trading career for the next few days is in a medically induced coma. By your own deliberate choice. This means you shut down your computer. You log out of your trading apps on your phone, and then, and this is the hard part, you delete them. Yes, delete them. The panic and temptation of having them just a thumbprint away is too great. You can always reinstall them later when you are no longer mentally compromised. Right now, access is the enemy. Your brain is screaming for a dopamine hit of either revenge or resolution. It wants to see the charts, to find an opportunity to fix the problem. You must starve it of this stimulus. Unfollow the financial news accounts on social media. Mute the group chats that are buzzing with tickers and trade ideas. Tell your trading buddies you're taking a few days off, no questions asked. You need to create a vacuum, a space completely devoid of market noise. The constant chatter, the green and red arrows, the endless stream of opinions, it's all salt in a very, very deep wound. You wouldn't try to perform surgery on yourself in the middle of a rock concert, so don't try to perform mental triage while the market is screaming in your ear. What do you do with this newfound silence? You fill it with the physical world. You need to get out of your head and into your body. Go for a long walk, a brutally long walk. Walk until your legs ache and your mind is too tired to do anything but focus on your next step. Feel the pavement under your feet. Notice the temperature of the air on your skin. Listen to the sounds of traffic, of birds, of life happening completely independently of your P&L. This is crucial. It reminds you on a primal level that the world did not end. The sun still rose. People are still living their lives. Your loss, as monumental as it feels to you, is not the center of the universe. This perspective is the first dose of medicine. Engage in a physical task, a task with a clear beginning, middle, and end. Clean your entire house. I mean really clean it. Scrub the floors. Organize that closet that's been a mess for years. Cook a complex meal from scratch. Garden. Fix something that's broken. These activities are meditative. They require focus, they ground you in physical reality, and they provide a small, tangible victory. You turned chaos into order. You created something. You fixed something. In a moment where you feel powerless and destructive, these small acts of creation and control are incredibly therapeutic. They prove to your battered psyche that you are still capable. Do not, under any circumstances, turn to other forms of gambling or high-risk behavior to numb the pain. No trips to the casino, no reckless spending, no substance abuse. Your brain's reward system is fried, and it's desperately seeking a shortcut back to feeling good. You have to be the adult in the room and deny it that shortcut. Instead, connect with something real. Call a friend or family member you trust. Not to talk about the loss, not yet, but just to talk. Ask them about their day. Listen. The simple act of focusing on someone else's life for 10 minutes can pull you out of your own spiraling narrative. And finally, sleep. Your body and brain have undergone a genuine trauma. Stress hormones like cortisol are flooding your system. You need to rest. If you can't sleep, then just lie in the dark. Practice deep breathing exercises. There are countless guided meditation apps, not for trading, but for sleep and anxiety. Use them. Give your mind permission to shut down. The problems will still be there tomorrow. The numbers on the screen won't change, but your ability to face them will be drastically different after a night of restorative rest versus a night spent staring at the ceiling, replaying every mistake in agonizing slow motion. This first phase isn't about solving the problem. It's about stopping the bleeding. It's about surviving the initial impact. You have to create a firewall between your panicked mind and your trading account. Pull the brake. Disconnect. Get physical. Rest. This is your only job right now. Do it with the same discipline you wish you'd had in your last trade. Chapter 2. The Unflinching Autopsy. A data-driven confession. The initial shock is beginning to fade. The raw, screaming panic has subsided, replaced by a dull, heavy ache. You've survived the immediate aftermath. Now, the real work begins. It's time to walk back into the wreckage, not with emotion, not with self-loathing,
but with the cold, detached precision of a detective arriving at a crime scene. We are going to conduct an autopsy on your dead trade. The goal here is not to punish yourself. The goal is to understand the exact cause of death, to learn every possible lesson from this failure so that it is not repeated. This process must be brutal in its honesty and meticulous in its detail. Get a notebook and a pen, a physical notebook. There's something about the act of writing by hand that connects to the brain differently. It's slower, more deliberate. It forces you to process. Title the page, Trade Autopsy, Date of the Loss. Now you are going to answer a series of questions as if you were writing a report for a supervisor you cannot lie to. You are accountable only to the facts. Question 1. What was my original thesis for this trade? Be specific. Write down in clear, simple language why you entered the trade in the first place. What was the setup? Was it based on technical analysis, a specific chart pattern, a fundamental catalyst, an earnings report? Write it down as if you were pitching the idea before you entered. For example, my thesis was that stock XYZ would break out above the $50 resistance level due to strong sector momentum and a bullish flag pattern forming on the 4-hour chart. My target was $55 with a stop loss at $48.50. Be honest. If your thesis was, I had a hunch, or I saw some guy on Twitter hyping it, write that down too. That's data. Brutal, but essential data. Question 2. Did I follow my plan? This is the moment of truth. Go back to your answer for question 1. Look at the plan, the entry, the target, the stop loss. Now document what actually happened. Did you enter at your planned price? Did you use your planned position size? And here's the big one. What happened with your stop loss? Did you have one? If so, did you honor it? Or did you move it down when the price started going against you, whispering to yourself, I'll just give it a little more room? Did you average down, turning a trade into an investment, adding more money to a losing position in a desperate attempt to lower your cost basis? This is where most trading disasters are born. Document every single deviation from your original plan. No judgment, just facts. I moved my stop loss from $48.50 to $47 because I felt it was a fake out. Then I moved it to $45. Then I removed it entirely. Question 4. What was my emotional state during the trade? This is about journaling your psychology. Reconstruct the timeline. How did you feel when you first placed the trade? Confident? Anxious? Greedy? As the trade moved against you, what were your thoughts? Were you hopeful? Were you in denial? Were you praying? Were you gripped by fear, unable to close the position because that would mean admitting you were wrong and realizing the loss? Did you feel a sense of euphoria when it briefly moved in your favor, causing you to get overconfident? Write it all down. I felt immense greed. I was already spending the profits in my head. Or, I was paralyzed by fear. I knew I should have cut the loss, but I couldn't bring myself to click the button. The loss felt too big to accept. This is often the most painful part of the autopsy, but it's where the most profound lessons are hidden. Question 4. What external factors influenced my decisions? Were you looking at a social media feed while the trade was active? Were you in a chaotic group chat where people were panicking or, conversely, being overly confident? Were you trading while distracted by work, family, or other stressors in your life? Did you let someone else's opinion override your own analysis? Again, be brutally honest. I saw a well-known trader say they were adding to their position, so I ignored my own sell signal and held on. This reveals your vulnerabilities. It shows you where your process is susceptible to outside interference. A profitable trading process needs to be a fortress, immune to outside noise. Your autopsy will reveal the cracks in your walls. Once you have filled these pages, Put the notebook down. Walk away for an hour. Let it sit. Then come back and read it. Read it not as your own story of failure, but as a case study. What do you see? You will almost certainly find that the disaster wasn't a random market event. It wasn't just bad luck. It was a chain of specific, identifiable decisions, a breakdown in process, a failure of discipline. You will see a moment, a single point in time, where if you had followed your original rational plan, the loss would have been a small, manageable one, a paper cut. But a series of emotional decisions turned that paper cut into a gaping wound. This document is now your blueprint for what not to do. It's more valuable than any trading book you can buy. Don't hide it. Keep it. When you eventually return to trading, you will read this autopsy report before you place your first trade. It is your personal testament to the cost of indiscipline. It's not a monument to your failure. It's the foundation stone of your future success. You have stared into the abyss, you have documented what you saw, and you have survived. The path forward is now about honoring the lessons you've just paid for so dearly.
Chapter 3. Deconstructing the Ego, the God Complex, and the Gambler. You've done the hard work of the autopsy. You have the data, the sequence of events, the breakdown in discipline laid bare on the page. Now we must go deeper. The autopsy showed you what happened, but now we have to understand why it happened. A huge loss is rarely just about a single bad decision. It's the catastrophic failure of a flawed underlying mental framework. It's time to put your ego on the operating table. Because deep within every trader who has suffered a massive blow-up, there are two conflicting, destructive identities at war: the God Complex and the panicked gambler. Let's talk about the God Complex first. This is the subtle, seductive voice of arrogance that grows during a winning streak. Remember that? When every trade you touched turned to gold? You weren't just following a plan, you were the plan. You felt you had a special connection to the market, a sixth sense. You weren't just reading the chart, you were one with the chart. The rules felt like they were for beginners, for lesser traders. Your intuition, you believed, had evolved beyond simple stop losses and position sizing. This is the God Complex. It whispers that you're smarter than the market, that you can outwit it, that this time you know something everyone else is missing. This complex is what allowed you to take that oversized position. A normal, disciplined trader would look at their risk parameters and say, my maximum risk on any single trade is 1% of my capital. The God Complex says, but this is a once-in-a-lifetime setup. We have to go big. Rules are for ordinary opportunities. This is extraordinary. The God Complex is what allowed you to ignore your stop loss. A disciplined trader sees their stop as an unbreakable contract with themselves, a pre-commitment to being wrong. The God Complex sees the stop loss being approached and says, this is just a shakeout to scare the weak hands. They're trying to hunt my stops. I'm not weak. I'll hold. I'll even add more. It reframes a clear signal of failure as a test of your superior conviction. Then, when the trade turns violently against you, the God Complex shatters. It evaporates in an instant. And in its place, a different, more primal entity emerges, the panicked gambler. The God is dead, and the gambler is thrashing around in the ruins, trying to get out of the pain. The gambler isn't thinking about probabilities or risk-reward ratios. The gambler is running on pure adrenaline and fear. The gambler's only thought is, I have to get back to even. This get back to even mindset is the most destructive force in a trader's psychology. It's no longer about making a good trade. It's about erasing a mistake. It's the mentality of the casino patron who doubles their bet after every loss, convinced the next hand have to be a winner. This is when you average down. That wasn't a strategic decision. That was the gambler throwing good money after bad. This is when you held on,
praying for a reversal, long after any rational thesis was invalidated. That wasn't patience. That was the gambler frozen at the slot machine, waiting for the bells that were never going to ring. The God complex put you in a dangerous car, and the panicked gambler slammed the accelerator to the floor instead of hitting the brakes. Your task now is to deconstruct these identities. Take out your notebook again. Write down honest answers to these questions. When have I felt invincible in the market before? Think back to winning streaks. Did your position sizing creep up? Did you start feeling like you couldn't lose? Acknowledge that this feeling is a red flag, a warning sign of impending doom, not a mark of genius. What is my relationship with being wrong? Do you view a small loss as a personal failure, a hit to your intelligence? Or do you see it as a business expense, the cost of gathering information in an uncertain environment? A truly professional trader is an expert at being wrong and moving on quickly. The ego hates being wrong. What does money represent to you? Is it just a tool for keeping score and growing your account? Or is it tied to your self-worth, your sense of security, your proof of success to the outside world? When money is deeply entangled with your identity, a financial loss feels like an existential threat, triggering the panicked gambler. By honestly confronting these questions, you begin to dissolve the power of these two destructive forces. You must consciously cultivate a new identity, the process-oriented professional. This identity is neither a god nor a gambler. The professional understands that they do not control the market. They are not smarter than the collective wisdom of millions of participants. They can only control two things: their process and their reaction to the outcome. The professional's self-worth is not derived from a single trade's outcome. It's derived from their ability to flawlessly execute their predefined, well-researched plan over and over again. Taking a small, planned loss is a mark of success for the professional, because it means they followed their rules. Letting a small loss turn into a catastrophe is the only true failure. This is a profound mental shift. You are moving from an ego-driven pursuit of being right to a discipline-driven pursuit of following your process. This loss, this immense pain, is your opportunity to burn away the God complex and starve the gambler. It's a forced humbling. The market has held up a mirror and shown you the flaws in your psychological foundation. Your job isn't to curse the mirror, it's to thank it for the brutal, painful, and priceless lesson. Now you can rebuild on solid ground. Chapter 4. The Forgiveness Protocol. Releasing the Debtor. Of all the steps in this recovery, this one might be the most difficult. It feels counterintuitive. You've made a colossal mistake, one that has caused real financial and emotional damage. The instinct is to punish yourself, to carry the weight of this failure as a constant reminder, a form of self-flagellation to ensure you never make the same mistake again. But this is a trap. You cannot move forward as a trader or as a person while you are shackled to the ghost of your past failure. You must engage in a deliberate, active process of forgiveness. First, let's be clear about what forgiveness is not. It is not forgetting. Forgetting would be a disservice to the expensive lesson you just learned. Your trade autopsy is your memory. It ensures you don't forget the what and the why. Forgiveness is not excusing the behavior. It's not saying, "Oh, it was okay that I was reckless and broke all my rules." It was not okay. It was a failure of discipline, and you have acknowledged that. Forgiveness in this context is the act of canceling a debt. Right now, you see yourself as a debtor. You owe something. You might feel you owe your family for the financial setback, or you owe your future self a recovery of the lost funds. But the most punishing debt is the one you believe you owe to your own standards. You feel you've failed your potential, and you've sentenced yourself to a period of shame and self-hatred as penance. Forgiveness is looking at that psychological debt and choosing to cancel it. You release yourself from the obligation to feel worthless. Why is this so critical? Because a trader operating from a place of shame is a dangerous trader. Shame clouds judgment. It makes you risk-averse when you should be taking a valid setup because you're terrified of losing again. Even worse, it can make you reckless, causing you to take an ill-advised gamble because a part of you feels you deserve to lose, fulfilling a self-sabotaging prophecy. You cannot trade with a clear, objective mind if your inner monologue is constantly whispering, "You're an idiot, you're a failure, you're gonna mess this up too." So how do you practice this? It starts with separating the action from the actor. You made a bad trade. In fact, you made a series of bad decisions that led to a catastrophic outcome. That is the action. That does not mean you are a bad trader, let alone a bad person. Think of a world-class athlete, a star quarterback who throws a game-losing interception, or a top tennis player who double faults on match point. In that moment, they failed. They made a terrible mistake under pressure. But does that erase their entire identity as a skilled athlete? No. They remain a great athlete who had a bad performance. They will go back, analyze the film, practice, and come back for the next game. They don't walk around for the next 6 months thinking, "I am a terrible quarterback." They think, "I made a terrible throw." You must adopt this same mindset. "I executed a disastrous trade" is a fact. "I am a disaster" is a story you're telling yourself. You need to stop telling that story. One powerful exercise is to write a letter of forgiveness to yourself. It might sound silly, but it's a potent psychological tool. Get your notebook. On a fresh page, write a letter as if you were writing to a close friend who had just gone through this exact experience. What would you say to them? You would likely start with empathy. "I know you're in a world of pain right now. I know you feel ashamed and foolish. Those feelings are valid, but they are not the whole truth of who you are." Then you would acknowledge the reality of the mistake without judgment. You broke your rules. You let emotion take over, and you paid a high price for it. You owned that in your autopsy. You've looked the failure right in the eye. And then you would offer compassion and a path forward. But this single event does not define your intelligence, your potential, or your worth. You are a person who is learning a very difficult skill. This was a brutal lesson, but it is not a life sentence. I forgive you for the lack of discipline. I forgive you for the greed and the fear. You are human. Now we will take the lessons from this and we will rebuild. We will start again, smarter and stronger. The debt is canceled. You are free to move on. Read this letter out loud. Let the words sink in. You have to be the one to give yourself permission to heal. No one else can do it for you. This act of self-compassion is not a sign of weakness. It is a sign of profound strength. It is the choice to stop pouring your precious mental energy into the black hole of the past and instead invest it in the present and the future. Every time the shame and self-loathing creep back in, and they will, you must consciously intercept the thought. Acknowledge it. "Ah, there's that story again, the I am a failure story." And then you calmly replace it with the truth. "I am a developing trader who survived a major setback and is committed to a disciplined process. I have been forgiven. My focus is on the next right action, not the last wrong one." This is a practice. It takes time. But without it, you remain your own worst enemy, forever trading against the ghosts of your past. Forgive yourself. Cancel the debt. Set yourself free. Chapter 5. The Sandbox, a Strategy for Re-Entry. You've disconnected. You've performed the autopsy. You've confronted your ego, and you've begun the process of forgiveness. A semblance of calm has returned. The raw emotion has receded, leaving you with the lessons. Now the question looms, how do I get back in? The temptation can be to jump back into the same market at the same size to prove that you've learned your lesson and to start the long journey of earning back what you lost. This would be a grave mistake. Your confidence, whether you admit it or not, is shattered. Your psychological capital is just as depleted as your financial capital. Jumping back into the fire is not bravery, it's folly. You wouldn't run a marathon the day after recovering from a severe illness. You need a period of rehabilitation. In trading, we call this the sandbox. You are going back to the very beginning, to a safe environment where you can practice the right habits without the risk of catastrophic failure. The goal of this phase is not to make money. I will repeat that because it is the most important rule. The goal is not to make money. The goal is to execute your process flawlessly for a set period of time. It's about rebuilding your confidence through a string of disciplined actions, not profitable outcomes. First, you must redefine your plan. Based on your trade autopsy, your trading plan now has some new non-negotiable rules. Write them down. Make them explicit. For example, I will never risk more than 0.5% of my account equity on any single trade. Notice we are starting smaller than you might have before. I will always have a hard stop loss in the system from the moment I enter a trade. It will not be a mental stop. I will never, under any circumstances, move my stop loss further away from my entry price. I will never add to a losing position. I will trade for a maximum of 2 hours per day and review my trades at the end of the week, not during the trading day. I will fill out a pre-trade checklist before every entry, confirming the setup meets all my criteria. This revised plan is your new constitution. It is sacred. Now you need to practice executing it. Phase 1, the simulator. For at least 1 to 2 weeks, you will not trade with real money. You will paper trade on a simulator. I know what you're thinking. Paper trading is useless. It's not the same without real emotion. You're right. It's not the same. But that's not the point. You are not practicing emotional control right now. You are practicing procedural adherence. Can you follow your new, rigid set of rules when nothing is on the line? Can you identify a setup according to your plan? Can you place the entry, the target, and the stop loss correctly? Can you walk away and let the trade play out without fiddling with it? You need to build a track record of perfect execution. 10 trades in a row, 20 trades in a row. Follow your plan to the letter. This is about rebuilding muscle memory, the muscle memory of discipline. Phase 2, micro size. After you have proven to yourself that you can flawlessly follow your process on a simulator, you may return to using real money. But you will trade at the absolute minimum possible size. If your platform allows for 10 shares, you trade 10 shares. If it allows for micro lots in Forex, you trade micro lots. The size should be so small that the monetary gain or loss is almost meaningless. It should be a joke. If you lose, it costs you less than a cup of coffee. Why? Because we are now reintroducing the element of emotion, but at the lowest possible volume. The goal again is not to make money. It is to see if you can still follow your process perfectly when there is real, albeit tiny, money on the line. You are a scientist testing a hypothesis. The hypothesis is, I am now capable of following my trading plan without deviation. Every trade is an experiment. A trade that follows the plan perfectly and results in a small loss is a successful experiment. It is a win. It proves the hypothesis. A trade that breaks the rules, even if it results in a small profit, is a failed experiment. It proves you are not ready. You must journal every single one of these trades, focusing not on the P&L, but on a simple question. Did I follow the plan? Yes or no? You will stay in this micro-size phase until you have a long, unbroken chain of yes answers. perhaps 20 or 30 consecutive trades where you followed your plan perfectly regardless of the outcome. This process could take weeks. It might take a month or more. It will feel slow. It will feel tedious. Your ego will tell you it's a waste of time and you should be scaling up to make your money back. You must tell your ego to shut up. This slow, deliberate, boring process is you forging your new armor. You are layering on discipline one small, perfect trade at a time. You are proving to yourself with irrefutable evidence that you are no longer the reckless gambler who blew up. You are the process-oriented professional. Only when you have this evidence, this track record of discipline, can you even begin to consider slowly, incrementally increasing your position size. But you never go back to the size you were trading before the loss. You have earned the right to scale up one small step at a time. And with every step, you must continue the rigorous adherence to your process. This is the path back. It is not a sprint. It is a long, deliberate march. It is the only way to ensure that when you finally step back onto the main battlefield, you do so not as a wounded soldier, but as a hardened veteran.
Chapter 6. The Phoenix Protocol. Integrating the Pain. You have walked through fire and have begun to emerge on the other side. You faced the abyss, dissected the failure, confronted the ego, forgiven the self, and rebuilt your habits from the ground up in the sandbox. This final stage is about transformation. It's about ensuring this devastating loss doesn't just become a scar that you carry, but a fundamental, integrated part of your strength as a trader. It's about rising from the ashes, not as you were before, but as something stronger, wiser, and more resilient. This is the Phoenix Protocol. The core of this protocol is the shift from viewing the loss as a singular catastrophic event to viewing it as your most profound and expensive trading seminar. You paid a tuition fee far greater than any course could ever charge. The lesson, therefore, must be valued and integrated accordingly. It must become a permanent part of your trading DNA. How do we do this? We codify the lessons into principles that guide every future decision. First, you will cultivate a deep, abiding respect for risk. Before the loss, risk was probably an abstract concept to you, a number you had to calculate, a box you had to check. Now, you understand risk in your bones. You have felt its power to annihilate. From this day forward, you are not a profit seeker first. You are a professional risk manager first. Before you ever ask, how much can I make on this trade, you will ask with deadly seriousness, how much can I lose? What is the absolute maximum damage this position can inflict if I am catastrophically wrong? And can I survive it without emotional or financial ruin? This question becomes the gateway through which every potential trade must pass. If the answer is uncomfortable, the trade is off, period. This is not fear, this is wisdom. This is the scar tissue that makes you stronger. Second, you will embrace humility as a strategic advantage. Your God complex is what led you to believe you could outsmart the market. The Phoenix knows this is impossible. The market is an ocean of immense impersonal force. You are but a small ship. Humility is not about thinking less of yourself. It's about thinking of yourself less. It's about recognizing that your job is not to impose your will on the market, but to align yourself with its currents when the opportunity arises, and to seek safe harbor when the storms come. This humility will manifest in your actions. You will listen more than you speak. You will stick to your plan even when you feel a flash of brilliance, and you will have a healthy skepticism for any trade that feels like a sure thing. The Phoenix remembers that hubris is the fire that precedes the ashes. Third, you will build anti-fragility into your system. The concept of anti-fragility, coined by Nassim Taleb, goes beyond resilience. The resilient object withstands shock and stays the same. The anti-fragile object is strengthened by shock.
Your trading career must now be designed to be anti-fragile. How? By loving small losses. You will welcome them. Every small controlled loss taken according to your plan is a data point, a vaccine that inoculates you against a future pandemic. It sharpens your skills, tests your system, and reinforces your discipline, all at a minimal cost. You were destroyed by one large, uncontrolled event. The phoenix thrives by exposing itself to many small, controlled stressors. This means your trading will be a process of constant testing and refinement, where small failures are not only expected, but are a necessary component of long-term success. Finally, you will find a new why. Your old why for trading may have been rooted in ego, to get rich quick, to prove someone wrong, to have the freedom to do nothing. These are fragile motivators. A big loss shatters them. Your new why must be more robust. Perhaps your why is now the pursuit of mastery, the deep, quiet satisfaction of executing a difficult craft with excellence and discipline. Perhaps it's about building a secure, steady source of supplemental income for your family over the course of decades, not days. Perhaps it's simply the intellectual challenge of solving one of the world's most complex puzzles. Write this new why down. Put it on your monitor. It should be a statement of process, not outcome. My purpose is to be a disciplined, process-oriented trader who manages risk impeccably. When you have a bad day of small, controlled losses, this why keeps you going. When you have a great day, this why keeps you humble. It's your North Star. The pain of your loss will fade in its intensity, but its lessons must not. Do not try to bury the memory. Integrate it. Let it be the quiet, wise voice in your ear that reminds you of the price of arrogance, the necessity of discipline, and the supreme importance of process. You are not the same trader who entered that fateful position. You have been tested, broken, and remade. You have walked through the fire. Now you learn to fly with wings strengthened by the flames. That is the Phoenix Protocol.
Conclusion. We've walked a long road together, from the echoing silence of your initial loss to the forging of a new, more resilient identity. We've navigated the treacherous terrain of shock, blame, ego, and fear. If you have done the work, if you have truly engaged with each of these steps, you are standing in a very different place now. The ground beneath your feet, while perhaps not as lofty as it once was, is infinitely more solid. Let's be perfectly clear. This journey does not magically erase the loss from your account statement. The numbers are still the numbers. The financial reality is still something that must be managed with prudence and patience. There is no shortcut to recovering the capital. Anyone who tells you otherwise is selling you the same poison that led to the disaster in the first place. The long, slow, disciplined path is the only path. But what has changed, and what is far more important than the money, is you. The trader who was humbled, who was forced to confront their own recklessness and psychological flaws, is gone. In their place is a person who understands the true nature of this endeavor. Trading is not a video game. It is not a get-rich-quick scheme. It is a professional enterprise that demands the highest levels of discipline, emotional regulation, and self-awareness. Your huge loss was the brutal, non-negotiable entry fee into this level of understanding. Most people who pay this fee quit the game. They walk away, defeated, forever convinced that the market is a rigged casino. But you didn't. You stayed. You chose to face the failure, to learn from it, to let it change you. This choice is the defining moment of your trading career. Not the big win you once had, and not the catastrophic loss that brought you here. It is the decision to get back up, not with arrogance or desperation, but with humility and a plan. The trader you are meant to be is not the one who never loses. That trader does not exist. The trader you are meant to be is the one who loses well, the one who treats losses as the business expenses and data points they are,
the one whose self-worth is not tied to their P&L, the one who finds satisfaction in flawless execution, not just in profitable outcomes, the one who respects risk above all else. This loss was your crucible. It was the fire that had the potential to destroy you, but which you have chosen to use to burn away the impurities, the ego, the greed, the indiscipline. Your journey from this point on will be different. It will be quieter, less exciting, more deliberate. There will be fewer emotional highs, and, if you stick to your new principles, no more devastating emotional lows. It will feel more like a craft or a business, and less like a trip to Las Vegas. This is what professional trading feels like, and you have earned the right to practice it. The scar from your loss will remain. Let it. Let it be a reminder of the price of admission to true wisdom. It does not define you, but it has refined you. Now go forward, one trade at a time, one day at a time. Execute your process, and become the trader you were always meant to be.